Welcome out to another Trading Justice podcast. We're going to ask the question, is the bull just getting started? Especially after such a monster run, we think, at least I think, we'll see if Matt can pick some holes in my argument that the bull foundation is pretty strong over the next 12 months. I'll lay out those arguments after Matt dives into some expert technicals. And those expert technicals that Matt outlines in the newsletter and every day for our community of tackle trading is just one of the many reasons to be part of this pro community. It is an amazing community, Matt. It is a community you started many years ago. We're getting old when you can say many years. But how you doing, brother? Tell us a little bit about tackle trading before we dive into it.
Yeah, we've been hanging out with Tackle for well over a decade. There's no doubt about that. And if you're looking for an amazing community to call home, there's no better one than Tackle Trading, where you can get all your application and educational needs all in one. We got the Traders Report newsletters. We do shows every single day. We put out our reports every weekend. And in general, we love to hang out with our community, be a part of their ongoing success. And if you're interested, you could check out tackletrain.com, hit the link in the description below, and get a 15-day free trial on us.
Yeah, it's just a really cool place with really cool people, good coaches, good people. And the collective group tends to lead to a little bit of money being made, right? Which is why we do this. This is not an academic exercise. Matt, it may be an academic exercise for the Bears. At this point, there will be a bear market again one day. There will be a correction. There will be a pullback that actually touches the 50-day moving average, but that is not where we find ourselves nor set up at this point. Matt, what was your take on the technical read in the market in the newsletter this weekend?
You know, it was one of those situations where, we weren't really dialing in any specific pattern, Mark. And so, that was kind of last week and the week before when we were looking at the overextension of wave one in the current condition of the bull run in the market. We were navigating wave two the week after that. And it was really about understanding where the market was going to pivot going into wave three. And that's where we're at right now. We're in the middle of wave three here. Target zone's right around 69.50 to 7K from a targeting perspective. And when you're in the middle of a move and you're targeting, say, 69.50, which is the target in the newsletter in this wave, you're currently kissing up against 6,800, which means you got 150 points before you get into what we would generally describe as overextended, and you're 150 points away from the pivot point as well. And so you're right smack dab in the middle of the move. And so
now just to interrupt you real quick, what you said real quick, I love it, because as a bull, I'm like, well, I got more room to run. As a bear, I'd be like, well, I got room to fall.
Well, you can say whatever you want as a bear. I could care less, because this is not a bearish conversation. If the bears want to go against the strength of this trend, they're going to just do what they normally do and complain on Reddit boards. And so that's the only thing the bears can get here, because this is not a bearish conversation in any capacity. The primary trend is bullish. The intermediate trend is bullish, and we're in wave three of the short-term trend. And if you are not part of tackle trading and you heard what Mark just said, you'd be like, oh, it's bear time. We're seeing a little bit of slowing momentum in the middle of a move. No, what I wrote about in the newsletter was how to assess secondary patterns when you're not generally overextended in the marketplace, and how to drop that down from an intraday time period perspective and really kind of look at, say, for example, consolidation high base on the 4-hour chart, which is basically what we're going through right now. And so if the bears want to look at this, that's fine, but you're going against the trend, and I would never suggest going against the trend in the market, or once again, you're just going to be like every other bear I know complaining on Reddit boards. And so when the bears get the trend, we'll have a bearish conversation. Bears don't have the trend, so they're not really part of this conversation. This is a bull on bull conversation in my estimation. And so middle of the move, and I talked about being able to break that down from an intraday perspective and really kind of looking at your pattern development from a 4-hour time frame or a 1-hour time frame, so that you can still get those pristine entries, because it's tough after 7-8 days up in the market after a pivot to look at the daily chart and say, okay, this thing's going to continue to run. It's going to continue to run. It's going to continue to run, especially as we see a little bit of slow momentum. So where are those patterns that I'm talking about? Well, that's where you drop it down on the intraday time frame and really kind of understand, pattern development on the 4 hour time frame, pattern development on the 1 hour time frame. But at the end of the day, the market is kissing up against a major resistance zone right now, 6,800. That's the level on the daily chart that's pressing resistance. That's the level on the intraday chart that's pressing resistance. And if the bulls are going to continue to make a run here and not see some profit taking from the bulls, once again, this is a bull on bull conversation. It's really going to start with the pattern development that happens underneath 6,800 and then seeing that breakout of 6,800. So that's how I see the technical landscape. The tackle trading newsletter has been very, very spot on the technical edge over the course of the last little
I mean,
bit.
I don't even think you can give yourself enough credit. I'm not, I'm going to pat
I
yourself on the
just did.
back.
I said it's been very accurate.
I know, but like that doesn't even do it justice. Like it has been so precise, right, in calling the next move, which is not the easiest sport in the world, right? When you're dealing with,
Projecting technically pinpoint accuracy, yeah, I'd say that's pretty difficult actually.
and yet that is where in our communities benefit. I know I've benefited in reading that, my own trading and my own, profitability. And so, that's why when you said, I want to dive into the, top five, top three, top however many you said, reasons you think the bull run can continue. I was like,
Well,
I
that
want to
wasn't
hear
me
your,
who said that. I want to be very clear on that. Those are your reasons.
yes.
All I said was get a list. You wanted to lay out your bull case for the next 12
Uh,
months. I said, okay, do it in a list. It's not my list. I just want to be very clear on that. That's your list.
No, and Matt, one of the things that's been nice in this run is that there's been a lot of great technical signals in different areas of the market.
Mhm.
ARC had a breakout, several trading sessions ago. It's been a few sessions, and it broke out of a little high base pattern about a week ago and just flew. Some of the underbelly stocks that I affectionately call the underbelly, kind of those higher volatilities, have been very technically consistent on breakouts, on confirmation on pullbacks. We've had utilities, give us a breakout. We've had semiconductors just, and it's just been a really nice environment over the last week. Now, I'm going to ask the pessimistic question. I mean, are we just a little stretched in some of these hot areas of the market?
Um, yeah, we're a little stretched. I mean, you're up 150 points on the S&P 500. You've been running for 7, 8 days, and there's been certain areas of the market that had run a little bit quicker, a little bit faster than what was seen in the general market. And so, would I describe utilities, for example, as overextended? I would. I don't think there's any new entries, but that doesn't mean that this current leg is over.
Yeah.
And those are two completely different parts of the conversation. So once again, you take a look at utilities and you say, okay, yeah, utilities from a traditional perspective, certainly overextended. RSI is the highest it's been in pretty much the entire year so far, coming in at 73. You're
Utilities doesn't hit
right.
RSI at those levels very often.
Not unless you get an AI move. Not unless you get an AI move, and that's certainly what we had. You look at, for example, the technology space. It's been running for about 6, 7 days now. You're slightly overextended on that side of the equation on RSI as well. But when RSI gets overextended, it doesn't mean what people think it means. When RSI gets overextended and it gets above 70, that's a sign of strength. That's its relative strength indicator. It's not the relative overextended indicator. It's a sign of strength, which means the vast majority of the last 14 data points have finished closer to the high than they have to the low. RSI can live above 70. When you get above 70, it doesn't mean there's no tradable signals. It doesn't mean there's no entry signals. It simply means that you've been running hot. You have momentum more than anything, and you'd be looking at secondary patterns to be very aggressive on the swing trading side of the equation. When you're looking at official overextension, you have to take into account how far a market can move before it gets tired. And yes, indicators like stochastics, indicators like RSI can do a really, really good job of helping us understand that overall extension environment. But once again, specifically on RSI, once you're above 70, it just means you're running high. You've had the vast majority of the last 14 periods finish towards the high, and now you're starting to see that shift a little bit. So I wouldn't say tech is overextended right now. Tech just broke out 4 days ago, for example. You haven't really seen a sizable, you know, momentum move away from that 9 EMA. So simply because you're above 70, I wouldn't describe tech as overextended here. I would describe utilities as overextended because, unlike tech, which just broke out 4 days ago, utilities didn't just break out 4 days ago. Utilities actually broke out from its triangle a good week and a half, 2 weeks ago. You've already ran not 4 or 5 days, you've ran 9, 10 days, and you're above 70. And so it's the combination of looking at potential average yield, which is what I'm talking about, the behavioral of an area of the market running from a breakout to extension or running from support to resistance versus what you're looking at in those key indicators. So assessing overextended is not just simply as easy as saying RSI is above 70, stochastics is above 80, thus you're officially overextended. No, that's not what it means. The actual sell signals are when it comes underneath those levels, not when it goes above those levels. And so I wouldn't call everything in the market overextended right now. Like I said, the S&P 500 is in wave 3. It's in the middle of the trend in wave 3. You still got plenty of room on the top side to see some price discovery. And so I wouldn't call the market overextended. I wouldn't call technology overextended. You know, there are some extensions in the market right now, but the way I would personally describe it and how I described it in the newsletter, slight extension, and that's why it's important to understand the intraday conversation that I was talking about, because if you're going to just rely on the daily chart, yeah, you missed utilities. There's no doubt about that. You might even say you missed some other things, but if you're looking to catch some of that momentum in a slight extension, use the 4-hour time frame. It's a little bit better for that. And so but I couldn't just describe the market as overextended. No, I can't do that.
Yeah, like listen, and there are other areas that like industrials, like I know in the lounge today with Frank, he was bringing up things like Union Pacific that look prime, ready to go, nice patterns. That's something we do in our pro community all the time, is break down what's looking good today, not just what looked good 2 weeks ago. Another fantastic reason to come be a pro member, join the lounge. Matt, and one of the things, I guess one of the reasons I'm feeling froggy in a good mood, and froggy is always a term I use to describe when I'm feeling bullish,
Mm-hmm.
right, is the just the broad participation. And I'm not just talking about like different areas of stocks, right? We had crypto finally get involved last week, right? We've had precious metals get involved for, I don't know, like a long time now,
6,000
right?
years.
And so like we've had like individuals that have even something resembling a diverse portfolio, like have a lot of activity, that's that doing pretty good, lately, doing pretty good, not a lot of dogs in there. That move on Bitcoin though, Matt, the gold trend confirmed a high base breakout today. 100 million reasons. I wanted to do a podcast on why gold is awesome. It'd probably be a short
You don't
one.
understand that one by now. I doubt our podcast is going to introduce that one to you.
But the one technical thing, and then I wanted to get into our feature segment on why I'm so bullish over the next 12 months is, I've Frank and I both were complaining today about Bitcoin, how, and not from a price action, that just, and we got into a conversation about what are our least favorite technical patterns, and both of us like couldn't find a pattern we like least than when you run hot into a resistance zone. It really irks both of us, and he's a directional trader, I'm a theta trader, and it irks both of us. Do you share that irkness?
I would agree with you in general that
I just wanted your take on the technical pattern. Like,
overextended breakouts are a very difficult ask to go from support to resistance and then do that exact same thing over the next week, week and a half. It's a tall ask. You're asking for things that historically don't transpire. And when you're asking for things in the market that historically don't historically transpire, That's kind of insane. Like you're asking for something that just does not happen typically. And so it's a tall ask. Doesn't mean it can't do it, but it is a big ask. There's no doubt about that. I wouldn't describe an overextended breakout as I hate it though, because it's one of
And
those.
that's what I wanted to get at. So you don't hate
It's
it.
no, of course not. Why would I hate momentum? I don't hate it. No, of course not. But I'm also not going to trigger on an overextended breakout. And so if you're talking about, ooh, let's chase Bitcoin after day 8 of a momentum move, I would say, yeah, you probably missed, 14 different entries along the way. So why is this one now the one that's going to take off? And so I kind of feel like the people that are going to chase price going into the breakout are the future bag holders to a certain extent. And so I don't love triggering on an overextended breakout. It's one of the things that I just think is really really difficult to do. But I don't hate it because the secondary patterns that play out here are very very interesting in my opinion, because a lot of what the market is waiting on when momentum's going to shift and when momentum's going to carry. But the entire technical conversation is one of trying to understand momentum. You're not understanding anything right here. Bitcoin has momentum. You can clearly see it with your eyes. Expansion candles running very hot, running 15,000 points over the course of the last week and a half, all the way from support to resistance without a hesitation. That's a power move. That's momentum, and that momentum has a tendency to carry. Not every single day, not every single pattern, but when it's there, I say to myself, well, yeah, you might have missed that pristine breakout. Don't regret it. It came out of nowhere. But you look at it through a secondary pattern analysis perspective where you expect either a high base or you expect some degree of secondary pattern where you see a flag based pattern coming back down into the 9 EMA or something along those lines. And so it's one of those things where yeah, I can't hate it because there's a lot of really, really interesting patterns that can emerge over the next 3 to 4 or 5 trading sessions. And if all you ever say is, oh, I just hate it, I hate it, I highly doubt you're going to be in the right frame of mind to go look at it tomorrow and the next day and the next day and the next day to make sure that you don't miss something that you don't hate. So if you do hate an overextended breakout, I'm willing to bet you don't hate momentum, Mark. And I know,
Of
of course,
course not.
Frank doesn't hate momentum. And so I just think it's important to note that the hate part of an overextended breakout is the entry. It's missing the entry from 4 sessions ago and having to chase that, knowing you're late, knowing that everybody else is jumping in front of you, and you could be the last one to buy, which means you're the first one to lose. That mindset's there on an extended breakout. So what I would suggest is be patient. Patience is a position. Wait on a secondary. A secondary could be a very, very clean high base, and it could be a flag based pattern. Either one of those play here in this environment. So it's on the radar, and you can't hate it for that. I'll tell you what I do hate. I hate choppy price action that doesn't have an edge in any capacity. That's what I do hate. I don't hate a momentum environment that has the ability to create a very, very good secondary pattern.
Yeah, no, well, listen, and as I talk about the bull case for, and I'm going to be talking about it from an equity standpoint, that liquidity, which is, I believe, a pillar of the bull case, I believe will help Bitcoin tremendously moving forward. Remains my favorite asset long term. Remains my favorite asset long
Uh,
term.
every time you say that, I just got to pull up the gold chart
I
just to,
listen.
just to remind people. I mean, just to remind people of what gold is doing. While people talk about their favorite asset class, there is not a better asset class in every single capacity, from behavioral analysis to economic analysis to geopolitical analysis to fundamentals to technicals. And so really hoping Bitcoin gives us that pristine secondary pattern here, but any pattern on any time frame on gold plays. So again, favorite asset, I'll just kind of match your favorite asset with mine. It's gold. It's never going to change until the data changes. And in the time I've been trading, in the time I've been studying trading, in the time I've been studying economics, at no point has that ever changed for me on gold.
Yeah, both part of what is getting a lot of ink lately, in the global debasement trade. conversation for another. That's been thrown around by big banks quite
On what?
liberally. Like both of them, basically fiscal spending gone amok. And I'm like, you're just news flashing this now. But they come up with a catchy phrase. It's the global debasement trade. I'm like,
That's
yeah,
how they're describing gold going up.
yeah.
You
That's
should stop reading that nonsense.
well, listen, Bank of America, J.P. Morgan.
You
It's
should stop
always good to
reading
know
them.
what. Always good to know what they're
You
saying.
should stop
Always.
reading them.
So, well,
Their
listen.
takes are getting increasingly ridiculous.
Listen. I'm a financial nerd. What can I
So
say?
what was the gold trade 3 years ago, 5 years ago,
Oh, the
years ago, 10
fiscal
years ago, 15 years
recklessness
ago?
has been a
Because all they're
basic.
describing is the exact same reason gold's been going up for 42 years.
I know.
So like, stop reading them.
I know. I know. Well, listen. You and I were on with our pro community last night, and we just chat. We meet at the futures open a couple hours after the futures open, and we just talk markets, just kind of very relaxed, very free flowing.
Mm-hmm.
And as we were chit chatting, I was just talking about how I was pretty bullish over the next 12 months, and it was just in our general, just kind of back and forth. It's not often that I am more bullish than your average trader. That is for sure. I tend to be very pessimistic, but I think there is a pretty good foundation over the next 12 months. And I enjoyed the conversation we had last night, and I wanted to have a more detailed lay out my reasons and some of the arguments for our community here in the podcast. And so, oftentimes in these segments, Matt, you're doing the heavy lifting. I'm going to do some of the heavy lifting today, and you can play.
So
You,
how many reasons do you got?
I have got 5 reasons. Nice, not quite.
Top
Half
five
a
reasons Mark is bullish on the market over the next 12 months, correct?
yeah, half a David Letterman,
Yeah.
half a David Letterman top 10 list.
Are these in
All right.
order?
They are not in order. Well, the top three are weighted. I think, I kind of tie them in together. So I'm just going to, dive into it. There have been a lot of, negative short-term temporary headlines over the last 3 months, right? A story here, a headline there, but under the backdrop of it, we're coming off that fantastic earnings season. And what has it been, Matt?
Which earnings season?
Last earnings season, the one that we just had, right? Which was pretty solid. I mean, what did you give it? A B plus, which for you,
We've had 9 consecutive quarters of increasing EPS. Like that's why I asked which season. It's been a good earnings story for years now.
And that is, kind of like, the foundational reason for the next 12 months is, corporate America's profit engine still running hot. We haven't seen, any really degradation in margins, and, we talk about betting the trends constantly. American corporations really, and this is something Tom Lee, I heard him say many, many years ago, but the saying stuck with me. And I'm not the biggest Tom Lee fan, but he's a smart guy, says some smart stuff. Where he says, he's like, one day people will just give corporations the benefit of the doubt. And I remember when he said that a couple of years ago. What?
I disagree with that, but okay.
But like as far as the resiliency.
Are you talking people or traders? Like investors, traders, or people? Like people are not going to give corporations the benefit of it.
I'm sure he was referring to investors, but he might have been referring to mainstream. I don't know. I mean, Tom Lee's always like trying to sell something.
Mainstream people will not give corporations the benefit of the doubt. 50% of Main Street sees corporations as part of the problem, not part of the solution. And so I would disagree very aggressively with Tom Lee on Main Street America and how they see corporate America.
Yeah, well, but as far as just the continued, 8 straight quarters, there's not been any signs that it's not going to be 9, right? That it's not going to be 10.
Not only is it not going to be 9, I guarantee it will be 9.
And so if you have
hold on, Chucky, as long as long as we don't have a complete deterioration of all economic scenarios And even at that, we're going to have the ninth consecutive quarter of positive EPS. EPS expectation is 8% coming into the quarter. The average increase in expectation from the start to the finish is going to be somewhere around probably 13. I would say the over under is 13% growth right now. And so the equation for me isn't, is it going to be above zero? It's going to, are we going to end above 10% growth? And so and not only that, I know we're doing a full earnings preview next week, but Mark, this is the first quarter since the fourth quarter of 2001 where EPS projections in the third quarter actually went up and not contracted. It is extremely, extremely common for EPS to contract quarter to quarter as the bar gets lowered in earnings. That did not happen this quarter. This quarter, EPS expectations actually went up 0.1%. Typically, they contract by about 3% to lower the earnings bar for S&P 500 companies to get above it. Like I said, 78, 79, 80% of EPS of companies beat the EPS handle. And so now you have a situation where we're expecting double-digit growth. I do think that's base case. And earnings expectations actually went up in the quarter. Now, that might not be a great thing for the technical responses in the quarter because that's a very high bar instead of a low bar, and that's going to be part of the conversation we have next week on earnings. I'm also going to write about it in detail in this upcoming Tackle Trade newsletter as well. But on the positive side, EPS projections going up. Market's not worried about earnings in any capacity from a raw number perspective. The earnings landscape looks really good.
No, and your point, and you were talking about this in over the last week about third quarter, just as an earnings expert, how like you normally get a contraction. That's not what we're looking. I think it feeds into the resiliency, the efficiency, the margins, and obviously not every company is
I don't know
going
how
to.
you have a bad quarter as long as Mag 7 in the AI space is doing what they're doing. I think it's going to be very, very difficult.
And so like if you bet on a trend, if you use it as a backdrop, and when you look at some of the hiccups or the bear markets over the decades, right, there was usually an earnings deterioration. Like .com, I know there was a lot of headlines and this and that, how people remember it. At the end of the day, .com was an earnings story where you had earnings turn on companies. There were a lot of headlines and people talk about the valuations and the pets.com. Pets.com went bankrupt in 2000 before the .com bubble even burst. Like, many of the tech companies that people look back on the decades, those things had already went bust, before the .com bubble and that bear market started. It was an earnings story where earnings were deteriorating. We've seen no signs.
An interest rate story.
Yeah, and so we've seen no signs.
Same as 07, 08, by the way.
And so we've seen no signs of that. In fact, we've seen the opposite. And until you see a change in that story, man, it's really
the long-term trend unless you see a change.
And so I think that, that is a nice foundational pillar for the next 12 months of price action. And then number two, what inning are we in? And then we're going to talk about the second pillar now.
Mm-hmm.
You're my earnings guy. You're also my AI guy. Those are my first two pillars. And then I'm going to get into some of my fun stuff here in a second. But what inning are we in? I heard Jeff Bezos talking about data centers in space. What was it like?
Well, his comment was in 10 years from now, all the data centers that are taking up all the land is actually going to be built in space. And he's not wrong.
And and so but
what
that
inning of the AI narrative are you in? Is that
are we? I mean,
historically the first pitch just got thrown.
And that's the and that is the line of the podcast right there, if you remember anything, right? Because when Jeff Bezos was laying out this and my AI expert, I asked him what inning we're in, the first pitch just got thrown. Now, AI is transformative. This is a paradigm shift. This is going to change the way society is. It's going to have ramifications from top to bottom, right? Mm-hmm. And there's going to be a lot of companies and the bottom lines become more efficient. Now, is there a human toll and blah, 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 and this and that, right? These are the conversations I want to have on this podcast right? You had
We
one
can we
recently.
can talk about all the pros and cons of the AI narrative, and we need to understand those. But I've seen a few influencers start to get into the, is AI taking all the jobs and is this good for America? And I'd just like to remind the influencers out there who are trying to get visibility, you do not want to see what our world looks like if we lose that race.
You can, it's the
You can
same
take
type of.
that nonsense and throw it completely out the door. You do not want, as an American who cares about this country, you do not want to see what
It's a
happens
race to the moon, people.
the
It's a race to the moon.
AI arms race to AGI and quantum to China. Mark, here's the advantage China has over the United States. Number one, they have 1 billion people they are collecting data without any privacy laws. That is a massive, massive advantage that China has over the United States. What we have over them is we have the chips and they don't. And that is a big, 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 big differentiator. And so we cannot lose that arms race to China. And you can't say, ooh, let's not embrace technology because there might be some bad aspects of it. Because we don't live in a bubble. We live in a global economy where we have, I won't say enemies, but I will
I
say
can't
strong
believe they would
competitors.
even make that argument because of what you just said. It's not like if you
Because they're
decide.
starting to, Mark, they're starting to realize what I knew 2 years ago, that the job market is getting threatened. And now that people are starting to see the actual ramifications, they're getting scared. And I'm not judging the fear.
Yeah,
Okay.
no, it's a
I'm
real
not in
fear.
any capacity am I judging the fear. What I'm saying is we have to do a great job of regulating and informing and educating our American society on what AI is, and we need to make it universal. There's no doubt about that. But what we cannot do is lose this race to China. We
It's that
cannot do
simple.
that. That cannot occur. It cannot. It cannot. It is vitally important for us to win this AI arms race for very many reasons. But just one of them is you don't want to see what China does with it.
Yeah, I know. And so, like, when you have the foundational of the earnings, 8 quarter stretch, no signs of stopping, and you have, and I'm not talking about every AI company. I'm talking on the AI narrative, and we're going to talk about a couple AI companies and stock
AI
or drop.
impacts every company. I don't care what.
And that is the main pillar for me, is that the efficiency that it brings to the collective whole that you refer to as the publicly traded companies in the stock market, right?
Despite the fact costs are rising and an affordability crisis in America, profit margins are at record levels. Answer me why. Why are profit margins doing absolutely fantastic in the S&P 500 right now, but we live in an affordability crisis where cost is a concern on everything?
Efficiency,
What is the number one cost to produce a product in America?
labor.
Okay. And what are we now seeing the early beginnings of?
And
Not
this is
hiring
like,
labor.
and
It's
so
We're seeing the impact, efficiency, profit margins. We're starting
you
to see that
have to
early
understand
impacts.
this as an investor, right? And once again, I'm a glasses half full, half empty kind of guy. Heck, I'm a glasses like 98% empty. But the efficiency and the margins and the like companies are just gonna make more money. Like, it is just that simple. AI is going to help them just be more efficient. Are there societal costs? Yes. But you have to separate your investor hat from your citizen hat in
But
understanding that.
before anybody starts getting all hot and bothered over it, but we don't care about the negatives of AI. I care extremely deeply about the negatives of AI, extremely deeply. But we can't lose the voice to China. Like
Yeah, it's
that overcomes my fear. We have to regulate it. There's no doubt about that. And we're not doing a good job of regulating what's happening on the AI side of the equation. It is a open field out there for these dudes to play in. There's no doubt. But we have to win the race to AGI. We have to win the race to quantum. We have to get those data centers into space with Bezos 10, 15 years from now. We have to get to the age of robotics. And ultimately, Mark, our society is going to change. The labor environment is going to change. Capitalism, according to Adam Smith, if Adam Smith wrote The Wealth of Nations in the age of AI, I think he might have made some modifications to the book, don't you think?
Yeah.
Okay. And so there's a lot of fear for people for two reasons, in my estimation. How is it going to impact their normal everyday life? Okay. And number two, meaning how is it going to impact their job, their retirement? How is it going to impact those types of things that they work so hard for and care so much about? Number two, the fear comes from Terminator. We've all seen the Terminator saga. We've all seen kind of what happens when these things are unregulated and they start getting into AGI, and that can breed some fear as well. Regulations are important in all of this, but again, I don't control. I'm not the decision maker over who allows regulation on AI. I have to look at the environment and see it through clear eyes and make decisions for myself because I don't control those decisions. And also, Mark, what if every time we saw technological advances, we allowed our fear to take over? We allowed our emotions to dictate our actions and we stopped progress. Imagine what America looks like today if we allowed fear to stop progress. We don't live in the country we love today. We don't live in the number one economic powerhouse in the history of mankind if we allowed those things to happen. We're Americans. We strap our bootstraps up a little bit tighter and we get the job done. And so I totally understand the fear of AI and what it can do. But there's also so many benefits to what's happening on the AI side. Cancer research, for example, is a major one, but it's certainly not the only one.
Yeah, no, and just the collective whole, the benefit to your portfolio, if I understand this. And the one last point I would like to make on this is don't get sucked into the headlines of individual company in the AI space who might have some astronomical valuation, right? Like,
Oh,
and
there's a lot of those.
yeah, and there's a lot of those.
A lot
And
of
don't
those.
trap yourself in the mentality that, oh, we're in a bubble because that stock is in a bubble. That stock is in a bubble. It probably is, right? Unless it is one of the AI winners, right? Think about the collective market as a whole when you're having, those discussions. And AI is certainly is a
I get
driver.
concerned when Nvidia is in a bubble.
There you go.
Yeah.
That's another great line that you just dropped. All right, number three. So, the first pillar's earnings, the second one's AI that will continue pillar one. So pillar two kind of is like the push to pillar number one. Number three is global liquidity. Liquidity, anyone who's been around the markets know liquidity is a big deal. Go look at that chart. In fact, give me the S&P. Give me the S&P again you showed me the chart here a few minutes ago where it was like on a 5-year time frame, right? Where you had like 2000 and all that. This most recent run from 2023, this has been the AI as the main driver. That on the left of the chart, from the COVID lows up to the highs in 2021, that was global liquidity.
Mm-hmm.
That was central banks just pushing money into the system. That was enormous fiscal spend, which somehow we are still spending as much as we did then, despite there being no emergency. Get used to it. That's the way it is, right? But liquidity, is not stopping. And under Donald Trump, I cannot imagine a world where it does for the next 12 months. Between now and 12 months from now, there
By the way,
is.
at what point are people going to stop referring to the budget as we need to go pre-pandemic? That's never happening again. I wish people would stop saying it. It's not
No,
part
it's
of it's not even part of the analysis ever again. Like we haven't had 23% inflation since then. Like that's just gonna automatically disappear and the affordability crisis isn't here. And like I get it. People want to go back to the budgetary situation of 2019. You also would see the S&P 500 at 5,000 if that occurred. So not happening ever.
Yeah. China, and it's not just a US thing, and I'll get into some Trump here in a second, but China has been adding an enormous amount of liquidity to the system. Japan had a surprise result in their election this weekend, and she is not exactly going to be the one that pumps on the brakes.
First of all, they were pumping on the brakes.
They were pumping on the brakes.
She's a disciple of Abenomics. She's a disciple of modern monetary theory. Abenomics, Bidenomics are versions of modern monetary theory. Constant pump, constant pump, constant pump. We'll never see hyperinflation because of what happens in the reserve side of the equation, and we'll never have a recession because we can stave off everything through liquidity. That's all modern.
The Janet Yellen was part of that school of thought.
You might as well call Treasury Secretary Bessent part of that.
You might as well call Scott Bessent part of that.
And quantitative easing on the Treasury side of the equation. I don't care what party anybody is in. It doesn't matter. Nobody's taken the liquidity away from the market, in my estimation, unless it's planned.
And would you agree that Scott Bessent is a very intelligent individual, whatever you think about? Yeah, he's incredibly, and he's very market savvy. He knows how markets work. I
would say Bessent is probably one of the more talented Treasury secretaries. Yellen is up there. She's got a resume that's probably better than anybody. Although I do have a lot of disagreements with old Janet Yellen, but I would put Bessent up there with any Treasury Secretary of the last 20 years.
Yeah, no, he's very good at his job, right? And his job is to pump markets and make sure yields stay under control, right? And then occasionally go out and give a nice interview.
A little bit of the central bank role right there.
And so Scott Bessent is doing insane things, and insane from a continued to support and drive liquidity. And I cannot for the life of me imagine between now and 12 months from now, because this is why I'm bullish for the next 12 months. About 12 months from now is an election, midterm elections, that they're going to suddenly 4 or 5 months before the election say, we've been pumping the system, but we're going to stop. Right? Not going to happen.
Not going to happen. Next year's midterms are vitally important for both the Democrats and the Republicans.
And so you're going to
both of them are going to throw everything they can. You think the election last year was crazy? Wait till the midterms next year. They're going to be off the rocker nuts. And as such, both parties are going to throw everything they can. Well, we know the incumbent is President Trump, and he does not want to lose those midterms. I kind of feel like the economy number one, inflation backseat number two, because they do not want to go through that next year, obviously.
No, so Trump is spending money like a Democrat, right? Scott Bess is pumping money like an A+, violin player playing a masterpiece. China is dumping into the system.
Interpretation of Yellen. Yeah,
he is. Yes. China's pumping the system. Japan just elected a leader that's going to be pumping the system.
Europe is even before us.
The liquidity flows. Michael Hartnett.
He forgot to even add that Trump's going to get like 4 or 5 more members on the Fed next year.
Yeah, and speaking of Trump, Goldman Sachs says helicopter money is back.
Oh, absolutely.
Trump quote saying, "Listen, you can grow your way out of debt. We're not highly levered." Talking about a distribution dividend.
7 months ago, Goldman Sachs on this podcast.
So I have earnings. I have an earnings trend and company efficiency. I have an AI narrative that is driving
best tech narrative in the last ever.
That you're in the first pitch of. I have global central banks, and specifically for the U.S. markets, a U.S. administration that is highly incentivized to keep the gravy train going, right? And will do everything they can.
You're so convincing me to make gold my number one asset.
Yeah, no, you should. This is very bullish for gold, and this is very bullish for and I would argue very bullish for, assets in general.
It's very bullish for aggressive asset classes.
And so you got 3 amazing pillars that over the next 12 months. Now, does that mean you're going to not have corrections? Does that mean you're not going to have pullbacks? Of course not.
of course we'll have corrections.
But this, I believe, is a very
You
solid.
believe price will be higher in 12 months than it is
Yes, I do.
today. So do I.
Yeah, and
We're
I
not
do.
talking about tactically. How do you play the
We're
break?
not tactically. And then, to throw on a couple more little bonus, those are my three core pillars. I think they're
Oh,
really,
can I just talk about those three core real quick?
yes.
Um, I can't disagree with any of them. Mark didn't really tell me his top list. I mean, I knew some of
No,
it.
Matt was just curious. He's like, how come you're so bullish? I'm not used to my brother being so
I'm
bullish.
usually more bullish than Mark. I in almost every single capacity. I can't even remember the last time I had a conversation with you where I wasn't at least the same level or slightly more than you. You're usually the one that is a little bit more cautious on those things, and you're the one with a little bit more of the tinfoil concern, I would say. I'm usually the one talking people off. Oh my goodness, we're going to get a bear market. Oh my goodness, no, we're going to get a recession. I'm like, another one?
Yeah, I mean, the only thing that's going to disrupt this is if OpenAI and the stupid trick they're doing with the accounting, we'll talk about AMD here in a second, if bulls like lose faith, right? And that could cause disruption. I don't expect that to happen. We'll talk about that more in a second. But Matt, we're also heading into
I just said I agree with all three of your narratives. I can't nitpick any of them, honestly. I mean, we can
it's
debate,
a solid
but
foundation for the
I agree with all three.
yeah, and then you're in a period of a seasonality, right? Where you now we'll see like last year, right? You were in a bull market, and you didn't really do much, in the last half of the last quarter of the year, right? Kind of chopped a little bit, but historically, these tend to be very good stretches,
Mhm.
particularly for the Nasdaq as we enter this little stretch, and a lot of that relates to different things, right? And you got capital flows, you got reinvestments, you got all of that good stuff, but there's also there's reasons this will continue, and there's reasons it might continue like right now, super trooper style, right? And so yeah, I find myself, bullish. It's and not just in the short term, because obviously the technicals are nice. But I think there are some foundational things that give me, if we were to have pullbacks or you have those big red candle days, where you look at it as an opportunity, So, that's kind of my 12-month bullish case. I think it has a
Hold
pretty
on,
solid.
I only got 4 points, so I got seasonality, and then
Oh, I moved the fifth one into their kind of structural demand and capital flows, right? And you have institution
you
reallocation.
had four that you tried to get creative for number five.
Yeah, and so like buybacks,
Can we back up just a little bit to back to the seasonality conversation?
yeah,
I can kind of tell you had three major ones, and the other ones were just like, oh, I'll just throw
they're
those.
kickers.
Top
They're,
five better than top three, for example.
well, the three are so good, it's hard to like put
Head and shoulders good
yes.
above the other ones. When I'm looking at the seasonality conversation on the NASDAQ, here's kind of a list of a couple, the last few years on the NASDAQ. Last year, Santa Claus came to town, I would say, but a little bit of chop there. In 24, more sideways neutrality in general, but
But
in
drift up.
totality, the fourth quarter was great. It was just in December that
It
was
was just in December.
23 seasonality was fantastic, like absolutely fantastic. 24 in 22 was the foundation of the double bottom analysis coming into 23 that led to this beautiful 23 year. So there wasn't really a seasonality conversation. It was the year of inflation everybody was concerned about. 21 had a really good fourth quarter, but definitely went neutral over the course of the last, say, month in the market. 2020 had a good seasonality run in 2020, had a really good one in 19. 2018 was obviously interest rate hiking sensitive, PPT, plunge protection team. 2017, Santa Claus came to town. 2016, a little bit of meandering, but I would say out of the last 10 years, 6 to 7 of them had really good quarters and December. So there's definitely an edge on seasonality here.
Yeah, in 2022, you were already in a bear market, right? And so like
Right.
2022.
Well, and even in the 2018 situation, like you were already in a bear market then too. And so you take the two bear markets away and it's like rocking 80% seasonality.
Yeah, and if you remove hey, were you up a good chunk that year heading into the fourth
Mhm.
quarter? Well, then you're batting 100%
Yeah,
to some degree. And guess, are we up this year, Matt? We are.
it's been a good year so far. Been
And
a real
so
good
I expect that. So I think, there's a great 12-month case. And I think, you got, before you get to month 12,
Honestly,
you get to month one.
let's
And
let's let's go with the top four there because seasonality is certainly an edge. But those top three, those are good reasons to be bullish. There's no doubt about that. Everything else, I think we'll talk about it from a tactical perspective, but those are my reasons too, Mark. I mean, if you were to ask me, hey Matt, what's the top three reasons why you're bullish? AI one, AI two, AI three, because everything else rolls from the AI narrative. You don't have this fantastic earnings environment without the AI narrative, so they kind of hand in hand. But that's one A, one B for me. Is the earnings narrative is and the AI narrative. Both of them are extremely strong. Which one's more powerful? Ask me on any given day that ends in Y. On your third one, global liquidity, we're entering into some degree of cutting cycle. How aggressive does the Fed get? That's one. But you're talking from a global perspective, and I certainly do agree with you. In fact, I've been asked numerous times in the last week, about kind of that same type of, what's the global markets going to do from a liquidity type thing? And my answer has always been they've lost their collective mind. They're going to continue to pump because they have to, Mark.
they're going to pump until they can't for whatever
They don't
reason.
even have a choice, Mark. They don't even have a choice. This is not a debate. If the US has made the decision that tactically they're going to try to grow out of debt,
Which
because
they have.
either one, give yourself austerity measures, right? And balance the budget and have a prolonged, economic conversation of balancing the budget and getting back to a fiscal responsible path. That takes a lot of time. It's probably the more responsible path, but it does take a lot of time. That's not what the Trump administration has decided. And that was not decided in the last week. This was decided 6 months ago, Mark.
Yeah.
We even talked about it on this podcast. We've talked about it at Tackle a lot, but they made the decision, and Scott Besson talked about it, that they're going to grow out of debt. Now, if they can, fantastic. We should cheer them all on. But how do people grow out of debt? They pump that liquidity. And if the US pumps liquidity, that forces because everybody owns dollars, because dollars reserve currency. Well, that forces other countries to do the exact same to compete in that environment. And so that's a big one. Everything else is tactically short term, in my opinion. Those are the three core bull. That's the bull case for the market. The AI narrative powered through earnings, plus you got the liquidity injections over the course of the next 12 months. So I cannot disagree with your list. I think it's a good top three, and then seasonality coming into fourth, and whatever one you made up for liquidity on number five, that makes sense too.
Yep. So stock or drop. If anything's going to disrupt this
Good list, by
nice,
the way. Thank you for
it's a good list. I think it's a good case, and I think it's an important, like, for a narrative focused person
yeah.
like myself to understand what's driving those nice
Well,
technicals.
well, Mark, how many times have you seen the ultimate bearers do nothing but complain on Reddit message boards? Like,
Yeah.
why is the market continually going up? The markets went up too high. Really? Really? Has EPS stopped going up? Is the valuation so far out of whack that it's cray town? So like they just complain about
Unless you're a
price.
quantum computing stock, then
But that's
maybe.
my point is that they only complain about price going up with no context for what that price is. What you just laid out is a fundamental economic argument for why price is going to continue to go up. Bears are going to hate it. You're not wrong. Bears are going to continue to cry in their spilled milk on Reddit message boards.
Yeah, and there'll be a bear market just when those narratives get disrupted. Listen, man, and if there's anything, let's get into stock or drop at our next segment.
Bears
Got
Bears get days, we get months.
and if anything's going to disrupt this, it is probably going to be something we don't see, or bull on bull self sabotage. First stock or drop at AMD. like, copying their big Oracle playbook, OpenAI announcing a deal with someone that is maybe a deal and maybe it's real, and I don't know how anything's
We're going to
being paid for.
hypothetically give you a lot of money, and you're going to hypothetically give us a lot of shares if hypothetically these parameters are met in some distant future.
Yeah, and I don't like it. Listen, I just was like, bullish
It's
for 20
honestly the
minutes.
only thing that's ever reminded me of the dot-com
Yeah,
bullshit.
it's this kind of nonsense.
Mhm.
It is
I don't
like,
like it either.
like I don't like it. I don't like this. Hey, we're making a deal and this
OpenAI is
it
pledging
feels
hundreds of billions of dollars, and they don't have hundreds of billions of
they don't have hundreds of billions of dollars. And so, and it's, it is like
open. It's
headline
called a Ponzi
generating.
scheme, buddy.
It feels artificial and forced. And I think you have a fantastic long-term narrative. I don't know what the motivation is behind
Well,
it.
let's make sure that we give the news properly here. So,
Yes.
OpenAI basically announced that they are taking a 10% stake equity position in AMD. And when I read the headline, I was like, "Oh my God, that's how much is that? That's a lot." And then you read through the articles, these are all warrants that they can exercise for a penny a share if certain parameters are met, and there's no money on the table at the very beginning. Now, OpenAI is slated to be one of the bigger companies in the marketplace. There's no doubt about that. But OpenAI doesn't have that money yet. They got to get that money from, elsewhere. And so it's one of those situations that is like, do we have to do the deal of I'm bringing in $50 trillion when it's 2 trillion,
Yeah.
right? When 2 trillion is good enough, quite frankly. And so are we seeing a little bit of the outlandishness in what OpenAI is doing? And is it going to backfire a little bit in the short term? Like, I don't think anything OpenAI is doing on the AMD deal or the Oracle deal is
It's
gonna
not going to bring a bear
derail
market on.
anything like long term. But does it create
But
some
can it create a market accident?
volatility? Well, can it
Yeah.
do what?
Create a market accident, right? Where, there's, those periods of bull on bull crime. I mean, I think back at 2020, great bull market, you had a couple horrific two,
That's
three
not
day
my
sell off.
complaint. Like, I don't worry
Which
about Black Swan. If Black Swan happens, it happens. We're gonna have to
purple swan.
those in the moment. But for me, the concern isn't Black Swan. It's just not. For me, the concern is lack of consistency on the technical side of the equation, creating random volatility where it was not needed. And so, like for example, on AMD, you got a big gap out, sell down behavior. That's an exhaustion gap, what it looks like. Whereas AMD was setting up in a beautiful King's bed formation and just was primed to do a lot of good things. Now AMD's off the board, honestly, because what are you going to do? You got to wait on a gap fill. You got to wait on volatility decline. You got to wait on a lot of different things. So, if you're involved, fantastic. If you're not, it's kind of off the radar at this time. You go back to the Oracle news from the moment Oracle and OpenAI pulled out their news, all of a sudden you really haven't seen anything really take off ever since then. So, has there been a consistency on the technical side post Oracle? I would say no. Has there been consistency post AMD? Yeah, gap up, sell down. But yeah, my concern is the quality of the technical landscapes and random volatility for these stocks that are tied to that type of news.
Next one, Microsoft, Wells Fargo
Are we?
increased it.
We're stocking or dropping though, right?
Yeah, we're stocking or drop it.
Don't we have to answer?
Well, I read between the lines, but officially, stock it or drop it.
Um, First of all, I wouldn't drop any of these semis long term. Like AMD's that like in the short term, it's got to be off the radar because of the volatility, because you'd like to see the volatility play out. Long term stocked, not at 226, mind you. So like this one's hard because short term, long term, I have a different philosophy. Short term, it's off the radar. I missed the trigger. It's off the radar. It's never going to develop in front of earnings.
So So is that a stock it or a drop it?
Um, if you own it, it's a stock it long term. If you don't, it's a drop it.
Microsoft, Wells Fargo has raised its price target of Microsoft to 675, implying about a 30% upside. That's a nice candle. Like, you're
What's
gonna
that?
Wells Fargo upgrading to 675.
Okay.
And this was before today. This was a couple trading sessions ago. Nice price action. Obviously, that's beautiful patterns. The stock that we've talked about in our traders report the last couple of weeks. Stock or drop at Microsoft, man.
Yeah, it's a stock it. This going into wave three on the long-term trend looks really, really good. Cash flow direction both play. Microsoft had a knockout earnings report last quarter, hasn't done a thing wrong. And unlike a lot of other stocks that are overextended coming into this earnings season, Microsoft is not. It's a
Is
stock.
not one of them. That had appealed to me on a Monday morning. Still has appealed to me on a Tuesday. And I wouldn't be surprised if old Microsoft makes that journey to Wells Fargo 675 magical number. Next one, Micron. Haven't talked about Micron a little bit in the podcast. Our old memory storage stock that is at the center of the AI. Morgan Stanley upgraded it to overweight from equal weight. He said expect multiple quarters with prices increases in the double digits. Micron is uniquely positioned. This is not Morgan Stanley analysis. This is mine as kind of the leader of certain AI memory chips that you really can't get anywhere else. Kind of the NVIDIA of memory, if you will. Stock or drop at Micron, Matt.
Well, I think you got to look at stock and Micron here. They got a very compelling earnings story over the last couple quarters, 191 to 303. They're tier two AI gold rush stock. To me, stock it or drop it. Like tactically, I'd wait on something here. I wouldn't be chasing a 50-point move on Micron into $200 in any capacity, but high base, breakout of 200, flag down to 180 with the 9 EMA. Those both make sense, but it's got to be a stock. Tactically, it's a matter of how do you play it in the short term. When, like I said, you're back holding if you're chasing this candle at the top end, but it's got to be a stock. Micron's a big player in the AI space.
Yeah, if you believe in AI, you believe in Micron. Fantastic management team, fantastic CEO. It's just about how do you tactically play it.
Mhm.
How do you tactically play it? Now, tactically playing, going to the other side of the equation, right? Not every stock is a wonder. Old ANF. This is a stock that you have brought up that we have put on the radar of for our team as a bear candidate for the last 2 weeks.
Mhm.
Like there
A
was
lot in
news
our
today,
community shorting A&F on this gap down,
and so like it has been, a
including my
couple.
favorite rapid fire pick last week.
In fact, my analysis was so lazy. I just said I'm going with Matt's favorite pick because that
You
thing's
did,
so beautiful.
did.
I did. So this was both you and I's favorite bear coming into the week. And boy, talk about no suspense on a Monday morning. Stock it or drop it, A&F. And I wanted to bring up a retail company, and I got another one that follows because
It's got to be a drop it for me. A&F is in a nightmare situation here, and A&F certainly looks like it wants to come test into the low 70s, and that's kind of what me and Frank were thinking about when we put it onto the traders report this previous weekend. Is on the longer term side of the equation, you got the 200-day moving average right around the 74 level. But outside of that, there's a lot of data points as you start getting into 71, 72. And so, I had to chase a little bit on that gap today, but good open, good close. Let's see that momentum carry. It doesn't have to carry too far to get into T1, T2s, but it's got to be a drop in here. A&F's terrible. And by the way, just because A&F has that 200-day moving average on the long-term chart doesn't mean we're not going to be thinking about a short underneath that level too.
yeah. And then next one is Nike, the athletic shoe and clothing maker, right? Had earnings that weren't terrible. The price action's been a little wonky since earnings, but what was your take on earnings?
I thought it
And
was
this
their, I thought it was their one of their better earnings reports
And
in.
I was curious, like when I looked at this chart, I was like, okay, I know Matt probably had good earnings take,
I
but it's
did.
an interesting technical.
I
I was
did.
very curious on where you take the analysis here.
Um, I thought Nike had one of the better earnings they've had in the past few quarters. They've kind of been dog doo doo. in the past quarters. They had a pretty decent guidance report last quarter, but really didn't do anything with it. They had a really good beat, like a 27-cent beat. Revenue was beat, slight increase on guidance. I didn't give them the hat trick treatment because the veracity of the beats weren't there on the guidance side of the equation, but earnings was good. I wouldn't stock it personally, but I would understand somebody who was thinking Nike. Now, to me, I think there's better companies out there. And so I would stock their earnings, but I wouldn't stock their company, if that makes sense, Mark. They had a good earnings, but Nike's got a lot of work to do to actually get into that, conversation that we have on some of those retail companies in this space. Nike doesn't get talked about very often for good reason.
No, listen, always enjoy Stalker to Drop It and enjoy your analysis. Ready to do a couple quick Coach's Corner?
Yeah, sure.
We have not mentioned the shutdown in this podcast, even though we have not had a government open since our last one.
Are they still
But a question I got from a couple that said, listen, I'd like to get Matt's take. I felt offended because they didn't ask. They sent me the email, but they only wanted your take on it.
Uh-huh.
Why is the market doing what it's doing with the government shutdown? I got that a couple different versions of that, heading into the podcast.
For a couple reasons. Number one, I would say it's not like we're not used to the public spats between Republicans and Democrats in the year of our Lord 2025. Those dudes aren't shocking us anymore. Number two, the shutdowns are always negative. I don't think you can say anything's positive about a shutdown. And we shouldn't really deal with shutdowns, honestly. If we had a government who functioned at any consistent level the way it was designed, we would not have shutdowns. But here we are. Number three, shutdowns in the past really haven't seen a tremendous amount of economic damage. There's a cost to them. A lot of times that cost is opportunity cost that people aren't fully familiar with. For example, Mark, if Republicans and Democrats actually work together for the betterment of America.
Well, I heard that part and then I spaced out because I'm like, that's not happening.
If that was the case 5 years ago from the pandemic till today, would our totality of economic value be higher today than it is?
It'd be higher. Of course it would.
Right? How much higher?
Oh, that's a good question. Like that's
because Mark, it isn't incremental.
Now you got my interest.
It's not incremental. In fact, I believe
now you have my interest. I'm curious about this.
A completely just broken political system in America, our economic power could be probably twice as great as it currently.
Oh my goodness, are you serious?
I'm dead serious.
Wow.
Yeah. That's how much I think those dudes in Washington hurt us and don't help us. And again, I'm not saying Republican, I'm saying pox on both their houses in this conversation because we should work for the betterment of humanity. We're in an arms race with China, for goodness gracious, and all we can do is stop fighting with one another. But yeah, I oftentimes think in my head, like if in a perfect situation where we didn't have random stuff we constantly had to deal with, and we constantly worked for the betterment of America, where would we be economically? Where would we be politically? Where would we be historically? And sometimes when I have that little debate in my head, I get a little sad thinking about missed opportunity. And so people don't understand missed opportunity. They just see what they have in front of them, and they don't realize what could have been. And so in a government shutdown, there's missing components, but it's like you don't know them. Like people don't fixate on them. And so government shutdowns aren't as economically damaging as the politicians try to lay out, because it's not like everything gets shut down in a government shutdown. Mark, is the liquidity, did that stop running? Did they stop buying treasuries out of with QE money? Have they stopped that?
No.
So did Bessent stop buying U.S. bonds during the government shutdown.
No.
So if Besant's not going to stop buying government bonds during the government shutdown, is the market going to have that big of an impact? And so the ultimate question is not at the early beginnings if the market has an impact, because usually the market doesn't care about what the politicians have to say in the early innings of a government shutdown. But there's always a moment that happens that if it goes on too long, where people start getting concerned. And we're just not there yet. We're just not there yet. So why? I think if you want to look for one reason, government shutdowns aren't necessarily as negative to the market and economy as the conversations we have about government shutdowns. Like I was watching the Sunday shows yesterday morning, Mark, and it was all
Mhm.
about the government shutdowns. Every single one of them were about the government shutdowns. And you had Republicans come on and point the finger at the Dems, and you had Dems come on and point the finger at the Republicans, and everybody's playing that game, right? Well, can I ask you a question? Has anybody missed a paycheck yet?
I would assume at the tone in which you are expressing the question, the answer would be no.
Answer is no. When would they miss a paycheck? Answer is this coming Friday,
So
which
that's when it gets real.
that's where it gets real. Is when people start missing paychecks, and does that have an impact on consumer spending? Because the government, Mark, they're the number one employer in America, and so does that have an impact on consumer spending? Do we see that in the numbers? That takes a little bit of time to see that. So I wouldn't say government shutdown has had no impact, because again, kind of going on what we just talked about. If we'd never had the government shutdown, Mark, would we have broken 6,800 already?
The would we have
Would we have
probably?
broken 6,800 already if we never had the government shutdown?
I would say yes, we did, but I don't think
So there
Bitcoin would have.
has been an impact. Then you just
But
didn't.
I don't think impact. I don't think Bitcoin would have made its run. I think you would be still stuck in the mud.
Maybe, maybe.
Yeah.
My larger point is, though, is that there has been an impact, but just because the trend hasn't shifted doesn't mean there hasn't been an impact. There has been an impact. You just don't see it yet because it hasn't gotten to the point where it's concerning to the marketplace. And so I would say that usually takes at least a week and probably more so. And then even in the back of your mind, even on the missed paycheck, I'm like, yeah, but they're going to get reimbursed for that missed paycheck too. So I just don't know how much of a totality of an economic impact. I think it's like 0.01% GDP for every couple days it's shut down. And so it obviously has an economic impact, but we haven't seen it play out as of yet.
Uh,
Historically, it's usually more than a week though.
Final question, and then we'll wrap up the pod. It's been a while since I heard you say, Matt, shifting volatility at the top of the chart.
No,
And then the question's like, is that something you look for or that just smacks you in the face when you see it?
it's a great question. Um, it more smacks me in the face. Yeah. It's
So you're like perusing your charts and you're like, oh,
oh, I can't not see shifting volatility, but no, when I'm it's not when I'm scanning. It's usually when I'm trading an asset or having I'm following this asset or the market itself, and it's never like one day you're all of a sudden, oh, that's shifting volatility, because one big candle is not shifting volatility. Shifting volatility is this. You got to have shifting, right? And so it's something that does stand out to me on charts. There's no doubt about that. But it smacks me in the face when it happens in the real time. Yeah, like it stares. It's like staring down the barrel at me. It's I can't not see it, and it's obvious to me. And when I see shifting volatility, I shut down completely until I get better pattern development. For example, I'll give you an example. I haven't said it very much on the S&P because we haven't had it on the S&P, Mark. Even in the ascending triangle here, there's no shifting volatility there. None whatsoever. This isn't shifting volatility. That's certainly not. These are all just normal technical functions. But if you go to Ethereum, this is shifting volatility, where everything's good, everything's good, everything's good, everything's good. And then, Mark, on that big power move, like I was in Ethereum and I got concerned in that power move. In the real time during this power move, we were in the lounge and I was talking to a bunch of
I think
people
that
who
happened on
also,
Jackson Hole, if I
yeah,
remember
who
right.
were also in Ethereum. And I said, it's probably ran too fast. And I remember that because people said, what do you mean? Like that just caught people off guard. What do you mean it's moved too fast? I'm like, you don't understand. Like these are good things in the moment because we're all making money and we're all excited. But if you were position trading it like I was just like, this ain't a great sign to see that type of move there. And then on the overnight session on the weekend, I believe it was the weekend here, just gave it all back. And once that did, Mark, I knew like what I talked to the team about was it was the concern here. And I said, okay, we're still not going to stay in as long as we're above the stop loss, above that pivot point. But in the back of my head, Mark, I knew this trend was dead. Like I knew it was dead. And I was just kind of hoping that it would pivot and shift away. But no, that's shifting volatility, because at the top end of a trend, you typically see less volatility, not more. You typically see slowing momentum, not increasing. And so when you see the opposite, it does stand out and it hits you like a bag of bricks.
Yeah, listen, that's a podcast, bro. I've enjoyed it very much. Send us out.
Yeah, if you love the podcast, love tackle trading, hit that like and share. Leave us a comment on the podcast, no doubt. And if you're ready to become a pro member of the best trading community out there that puts the education and the application together, hit that link in the description in the podcast, in the description below, and sign up for a free trial membership of the Tackle Trading Pro membership. You can get access to the newsletter, the Traders Report, all of our shows, Traders Lounge, you name it, and also get access to this month's Master Trader class coming up in a couple weeks from now. And with that said, I hope everybody has a wonderful, wonderful, blessed rest of your week.
Now, have a great week, everyone.